Welcome to Flip the Cap, the industry's premier podcast that delivers insurance insights with a twist. I'm your host, Kathryn Smith, and today we are digging into large construction projects, specifically when they warrant a wrap-up policy, the pitfalls of not using a qualified TPA, and how to calculate the cost benefits of a wrap-up. Joining me today are Mike Yovino, Jencap's national practice leader for wrap-ups, and Josh Rogove, President of Consolidated Risk Solutions. Consolidated Risk Solutions is an industry-leading third-party administrator for large construction projects. Mike and Josh have very unique vantage points on the subject of wrap-ups, so we're going to explore every angle of them. Whether you're looking for fresh takes, deeper insights, or a competitive edge, you're in the right place. So let's dig in. So Mike, why don't you kick off the conversation and just level set on explaining what a wrap-up policy is and what the key benefits are of a wrap-up policy.
Wrap-up policies are consolidated insurance programs. It could be owner-controlled or contractor-controlled. The basis of it is that it's one policy for project or projects, and the insurance is provided by the owner or the contractor, and it includes all of the subcontractors that would come to site. So it basically covers everything start to finish, same consistent coverage, and it incorporates everybody as a named insured at the site. So in this instance, it's a preferable means of insurance for owners for projects or even contractors because it takes out the what ifs of having the subcontractors come to site to do work and worrying about is the coverage there for the work that's being done.
So that's a perfect explanation, sort of at a 30,000 foot level. What are some of the key benefits of doing it that way versus piecemealing it out?
Sure. So the key benefits are ease of use, consistent coverage, consistent claims handling. We can manage deductible levels and at times put caps on them. It gives a little bit more cost certainty to the owner so that when they get into it, while it seems daunting in the beginning because there's a lot of moving parts, but once they get into it and start to understand it, they can manage the costs of insurance and coverages for themselves throughout the entire process of the project. And that's not just, for the work being done, it's the project through the completed operations tail that varies by state.
And Josh, what's the TPA's primary role in a wrap-up project?
Our role as the administrator is the grease of the program. So we provide all the documents that go along with the program, instruction to bidders, procedures manual. We do a kickoff meeting where we invite all parties involved in the wrap-up, the retail broker, the insurance carrier, the owner, if it's an owner-controlled insurance program, and the general contractor. We then handle all the enrollments of all the subcontractors, so interfacing with every contractor that's coming on site, vetting their insurance for off-site operations, then gathering enough information from them so that we can notify the insurance carrier of who's on site, when their work is started. We do so for everyone coming on site, so prime contractors and lower tier subcontractors. If workers' compensation is included in the program, we're also there to gather the workers' comp payroll on a monthly basis from each subcontractor and the general contractor, because that is a requirement of the program. We handle the insurance tracking. So in the event there are any excluded subcontractors, so often on these wrap-up programs, the intention is to enroll all parties. However, suppliers, vendors, demo abatement contractors, they often would be excluded from the program. For those contractors, we verify that their insurance is proper for them to come on site and that it would respond. And then for any enrolled contractors, we're getting certificates of insurance to evidence their off-site coverage, because the intention of the wrap-up is only to cover construction operations at a designated location. So any incidents or occurrences that happen outside of that, that's not covered by the wrap-up. So we also ensure that their own insurance would respond for that. Throughout the wrap-up, we are reporting back how construction values are running, where the payrolls are, how the term is running. And then an optional service we have is getting involved with the insurance credit verification. So Mike talked a lot about the risk management benefits for these programs. However, at the end of the day, cash rules everything, and it's all about the cash. So from the financial standpoint, these things are like the Costco effect. So by a sponsor, an owner, a general contractor essentially procuring insurance coverage for everyone at a designated project for a designated time, they're able to do so at a cheaper price than what each individual party would have to pay for it. So our job as the administrator is also through the enrollment process to essentially verify what those deductive change orders are, or what the add alternates should be for their insurance coverages being provided by the wrap-up. So those are all of our services.
That's it?
That's it.
That's a lot.
In a nutshell.
Yeah.
In a nutshell.
Mike, I know that you see this all day long, but what are some of the pitfalls that you see when they don't choose a qualified TPA?
It goes into not just TPA from a wrap administration standpoint. A TPA could also be qualified too for subcontractor cert checking. Say an owner is not comfortable going in a wrap up. Again, it's a lot to look at. It's a lot to consider if you haven't done it before. Many of our retail partners out there are very qualified, but we also at Jencap have many partners that have never done a wrap up, and it just seems like it's a lot of extra work. In some instances, when they go non-wrap up, we could also bring that TPA in, like Josh's firm and others that can come in and do subcontractor certificate reviews and contract reviews. So they play a critical role in all aspects of it. It's like Josh said, it kind of keeps the train on the tracks for the owner. It allows communication to the owner or the contractor to know where they stand on a regular basis. They could track their stuff quarterly, monthly, however it's reported through the software system that the administrator's using. They'll have access to that live time, and they'll see what's going on from a claim standpoint. It's also a great tool for the retail agents. They could start to see how these projects come together, what the costs are, and some of the cost benefits. As Josh said, when they do bid to contractors and they start to collect data, they could start to develop insurance premiums under the wrap-up that the subcontractors would pay to be part of it, because they're enrolled. So now they're enrolled, it's under our insurance, it's consistent coverage. We don't have to worry about in a wrap-up saying you don't have a subsidence exclusion, or you do or you don't, residential or anything like that in these tougher states. And we're finding in most cases, project specific for the owner GC, again, while it seems cost effective, in many cases, the pitfalls you run into, the subcontractors come to the table many times with coverage that's not proficient to be on site, and they have holes in their program, which leaves our owners exposed. So in that instance, the administrator, again, can provide services to make sure that there aren't gaps in coverage.
Gotcha.
And Mike, I did talk a lot about the administrative services that we provide in the back end after the program is implemented. But to your point, being in business since 2002, we do have quite a bit of data. So we can also assist with the labor allocations that are needed, education of potential sponsors, Wrap Up 101, what's the pros and cons to including workers' comp versus not including workers' comp. The pitfalls that come along with taking on the large risk. Yes, there is value to that, but you have to start talking about words like letters of credit and collateral, and often those are showstoppers for certain sponsors. So happy to kind of be a resource overall. However, know that once the wrap-up is implemented, we're there essentially working with the subcontractors, the non-paying customers, but really they're making their lives easier so that they understand what they're enrolling into, what's being granted to them, and what's required of them.
So Josh, you touch on an interesting point with the data perspective, and this is to you also, Mike, but how do you calculate the cost benefits of a wrap-up? Mike, you touched on it a little bit earlier.
Sure. I mean, for ourselves, frontline broker, working with our retail agents, we can go out and secure the placement with the markets and come up with what the overall premium will be. The cost benefits really do come into with the administrator's assistance or your retail broker, depending on if they have services they provide. They will help do the financial pro formas and calculations that can show column by column and do a comparison of overall program, whether it be OCIP, CCIP, and then if you go into a project specific owner or owner GC, or even an owner's interest. And it can line by line break them out and show you where the pitfalls are, where the holes are, and what the overall cost benefits are.
And that's really why volume does play into it. I mean, as Mike said, there's different methods to insure a construction project. Traditionally would be owner brings their own coverage to the table, general contractor brings their own coverage to the table, and all subcontractors bring their own coverage to the table. So in order to figure out how much insurance is baked into the program, we essentially would ask each party what their insurance costs would have been ordinarily absent of the wrap-up. Once we have those identified costs, we can then compare that to whether it be an owner GC placement. So now we're looking at just the owner's insurance costs plus the general contractor's insurance costs. If Jencap's able to procure an owner GC project specific policy in line with the sum of those costs, often there's a financial decision to go that way. Often these wrap-ups and project specifics are put in place solely for the risk management benefits where they're not taking into account the financial side, but I'm talking through more of the financial side. Then when you look at the wrap-up side, it's essentially taking the sum of the owner's insurance costs, the general contractor's insurance costs, and all subcontractors' insurance costs. And now if we're able to take the sum of that and purchase a wrap-up, which include all those parties as named insureds under that, then that would be the financial reason to proceed with implementing a wrap-up.
Gotcha. So these wrap-up policies are certainly not a one-size-fits-all solution, particularly when you're dealing with construction defect states and otherwise. It varies state to state, risk to risk. So talk about some of the nuances of these policies that really warrant needing to, if you are not a specialist in these large construction projects, the need to work with a specialist like Jencap and yourself. What are some of those nuances that you see that can encourage an agent to pick up the phone and get some help and not try to do this themselves?
Kathryn, to answer the question, this is exactly why Jencap felt it was important to put together the national wrap-up practice within the organization. Collaboratively, we work together from across all the country and with our younger producers, and we saw a need to bring expertise to the table that can support these producers and our agents to make sure that the insureds are getting the broadest coverage possible with the fewest road bumps or bumps in the road. As far as, the practice itself, we've been at this, myself and Chris Bauer have been at this for 25 plus years. So we've seen just about everything. And we have the relationships with our administrators. It could be a third-party peer review for quality assurance on site. There's a lot of moving pieces that go in, but it will allow the producers that our agents are comfortable working with who may not have touched on this, we could bring that level of expertise to them and make sure that our insureds are getting the best product possible.
From our standpoint, I think that the wholesale broker that ends up placing the deal, it's critical that they have technical experience as far as the coverages that are warranted based on the project, understanding construction defect issues in particular states, amendments of the policy forms in certain states are required. So although you did mention that these things are complicated to put in place, I do like to call the GL onlys wrap-ups for rookies, because if you do have a good team around you, it is something that's easily done. However, I think you do need working with someone like Jencap, someone that has placed similar deals in similar jurisdictions and understand the market's appetite so that they're bringing the best deal forward for their insured.
I had a Florida risk that, everything the way it was going, it just made sense that, and Florida is one of those tough states. There are tough states out there. The construction defect states traditionally were out west: California, Nevada, Texas, Hawaii, Colorado. Very tough, but Florida and South Carolina and now even Jersey on the East Coast have gotten a little trickier. And they're complicated. And to your answer is, we had a project in Florida that they wanted the traditional owner contractor program, but the way things were coming together with contracts and everything, it just made sense to do the wrap up to cover the owner. And we pumped the brakes and told the broker that we would need to explore the wrap-up solution for this, even though the contractor wasn't willing at first, because we just didn't feel that they were going to be covered properly. The goal is to make sure that the projects run seamless, the state issues are covered, the changes in wording, the jurisdictions, the defect exposures, whether it's residential, and residential right now is extremely tough. We run into other situations where like Colorado, or amended definition of occurrence word in Colorado, Hawaii. Those are things that we need to focus on and make sure that you're getting those things touched on. And that's really what we try to bring to the table from an expertise standpoint, to make sure that the coverages are complete, that there are no holes in the program, so that these claims are handled when they do come in, because they do. Nothing's perfect. And then we can kind of move on to the next project, and hopefully the broker and everybody has a great experience with it. Brokers have a lot of choices in who they work with, and everybody has relationships, and they always ask, what does Jencap have different than our competitors. And the truth of the matter is most of the competitors that are in this space, they're all qualified. They're friends. A lot of us, Josh knows them. I know them. We compete well together. But the real difference is the brokers that they bring to the table with their years of experience and what they could do with the markets and the relationships we have to bring those solutions. That's really what the difference is.
And the value of the practice group that you all
Correct.
created at Jencap.
Correct. To provide support so that there aren't glitches or hiccups. The worst thing in the world, the one thing I hate is when somebody does something and then we have to get involved to try to fix something that wasn't done right the first time.
Yeah.
It's a lot easier to ask for help up front before a claim comes in, because that's really where the rubber meets the road, is when the claims come in, if they're settled, to make sure that they're covered. And yeah, exactly. No one's pointing at each other.
No.
Got it. Well, Josh and Mike, thank you so much for your time today. As someone who does not do wrap-up policies all day long, I certainly learned a few things from you all today. Josh, particularly our guest. Thank you. Unfortunately, that's all the time that we have today. So thank you for tuning in to Flip the Cap, the industry's premier podcast that delivers insights with a twist. We'll see you next time.